Hello, everybody, and welcome to our live show, Ask Abby, where we answer all of your questions about credit, debt, and finances. You've heard it all before. Welcome back, and thank you for tuning in today. We've got a great show for you. We're answering the question of what should I do if I have debt on more than one credit card? So, big questions for you today, and we've got some options, we've got some answers. But before we dive into that, I just want to say I know it's May 27th, which means April 1st is well on its way, and chances are you've got some payments coming due. So last week we talked about what should you do if your stimulus check has run out and you need some cash today. So I'm going to put in the video we did for you last week into the comment bar. I actually have people in my personal life that watched the video and were sent a check. So there's one particular tip in there: watch the video. If you do need some cash, definitely make sure you watch the video and comment, ask questions. Let me know if any of those tips work for you. So today we're talking about what do you do if you have debt on more than one credit card? You do have some options. Today we're talking about three main things: debt consolidation loans, debt management, and debt settlement. So what are those? What's the best option for you? Do you have other options? We've got answers. So today we're just going to dive into debt consolidation loans. What is a debt consolidation loan? You may have heard of it before. Basically, what happens is you consolidate all of your debt. So let's say you have three different credit cards. You have your travel, a couple travel cards, and some department store cards. You take the debt on all of those. You take out a loan so that you can put all of those debts, basically transfer the debt to this loan. Use the loan to pay off those debts, and then you have one monthly payment paying off the debt on that loan. So if you're considering a debt consolidation loan, you have a few things you need to consider. That sounds great, right? You have one monthly payment instead of 3, 4, 5, however many you might be facing right now. So there's a couple of things you need to take note of. Is first, how does a debt consolidation loan affect your credit? And how long will it take you to pay off that debt versus keeping it on your payments and keeping it on your previous accounts and making payments on those accounts monthly. So a couple of things to consider. One thing is that debt consolidation can really hurt your credit score. For up to 18 months, really. It can take 18 months to really get your credit score back down. And if your credit score is, less than 500, maybe 600, less than 600, you might qualify for a debt consolidation loan, but your interest rate might actually be higher than what you're originally paying with your previous accounts. The way that they lower your monthly payment is by extending the length of the loan. So you might be paying $200 a month versus $400 a month, but that's because they've doubled the length of your loan. You might be paying that $200 a month for the next 10 years. The other thing you need to consider is oftentimes there are advertisements, or you might qualify for a debt consolidation loan, and you might see that the consolidation interest rate is 7%. They sometimes advertise for that. But if your credit score isn't perfect, which oftentimes if you have a lot of debt, it's not going to be, and that's just that can be really difficult to understand. But if your credit score isn't perfect, you're probably going to have a higher interest rate. So you might not even be saving any money by having a debt consolidation loan. You might be paying more in the long term than those. So when is it an okay time to have a debt consolidation loan? If you're hanging in there and your credit score is like in the high 600s, mid 600s, something like that, you might actually be able to lower your interest rate from your cards and transfer to a debt consolidation loan. But because debt consolidation will damage your credit, just before you move forward with that, consider if you have some things in the near future that you might need a decent credit score for. Things like simple things like purchasing a phone, or maybe you need to purchase a car, or even might be looking at purchasing a house. So those are some things you want to make sure you consider if in the next 12 to 18 months you might be looking towards making some of those purchases. Hold off on a debt consolidation loan. That said, there are some other options for you. So let me just summarize. Two main points is, can your credit score take the hit right now? And will you qualify for a lower interest rate with a debt consolidation loan? Make sure you do your research and ask us questions if you have them in the comment bar. Make sure you're asking us questions. We can answer them for you, or call our coaches and they can help you really understand your options for managing your debt. On the topic of managing your debt, there's a program called a debt management program. We're going to talk about two more things today: debt management program and debt settlement. So if you have no more time today, if you're through today and you don't have any more time, I'm going to put a quick article in the comment bar for you. It's debt settlement versus debt management. What's the difference? What do you need to know? This article breaks it all down for you, highlights the pros and cons, the benefits and disadvantages of these two programs. So if you don't have any more time today, thanks for watching. Make sure you bookmark that article and get the details. But I'm going to make it really simple, break these two things down for you. So debt management plan has the least effect on your credit score. It's similar to a debt consolidation loan wherein you only make one payment. How do they do that? So if you're working with a company that's going to enroll you in a debt management plan, they work with your creditors on your behalf and ask them if they'd be willing to put your account into a debt management plan. What that does, and oftentimes when they do that, they're guaranteed a monthly payment. That's great for creditors, and it makes it easy for you as well. So oftentimes creditors will say, that sounds wonderful. Let's enroll this consumer into a debt management plan, and we'll even lower the interest rate for you. So your debt's not being reduced. The amount of debt you pay is still the same, but your interest rate can actually be lowered. So those payments can often be lowered. Plus, debt management plans allow you to pay back the debts, which stops the collection calls. It allows your creditors to understand that you're working on it, you've got the payments coming, and the collection calls, they'll stop. So that's wonderful as well. One of the things with debt management plans you have to consider is that every account that's enrolled in the plan has to be closed, which can have a negative impact on your credit score. So the debt management plan itself won't negatively impact your credit score. It'll actually possibly increase your credit score over time because you're reducing your debt and you haven't settled in any way. Your debt will be paid in full, but those accounts will be closed, which can sometimes negatively impact your credit score. Additionally, not all of your creditors will necessarily agree to enroll. So you might be able to consolidate some of your payments into a debt management plan, but not all of them. So it's definitely worth talking to a credit coach about your options for those. If you missed the video a few weeks ago, I interviewed Jennifer Rodriguez. She's an expert on credit coaching and these debt management plans, and I'm going to put the link in the comment bar. Watch that video if you're curious about how a debt management plan or how credit counseling works. Watch the video. She has some great insights into that. They've helped a lot of people over the years with a debt management plan. So the main highlights for debt management plan are in theory, you'll have one payment. If all of your creditors agree to the debt management plan, you will have one monthly payment. Additionally, it has less negative impact on your credit score as long as you follow the program. If you miss payments along the way, just like every other sort of debt payment or credit card payment, if you miss payments, it's going to negatively impact your credit score. And then ultimately, with a debt management plan, it's important to remember that you're still paying the full amount of debt that you owe. Your debt's not any less than it was before. A general rule of thumb that you can think about is if you have less than $10,000 in debt, debt management might work well for you because it won't take you too long to pay that off. Let's say you have more than $10,000 in debt. That's when debt settlement might actually be a really good option for you. So let's break down a little bit about debt settlement. What debt settlement is you work with a company that negotiates your debt on your behalf. Basically, what you do is you stop paying your payments altogether, your accounts go delinquent, and then from there, that company will call on your behalf to say, hey, look, we understand this consumer hasn't paid any of their payments, but maybe we can make an agreement on paying this much of it. And sometimes it can even decrease your debt by 50%. So if you have a lot of debt, and your credit score isn't necessarily great, so you might not get a great deal, great interest rate on your debt consolidation loan, debt settlement can actually be a decent option. It still will hurt your credit score though, and a debt settlement will be on your credit report for up to 7 years. So that's something to consider too, is it's a great option if you have a lot of debt, you're not sure how you're ever going to possibly pay it off, which happens often. It happens all the time, and there's still options for you, definitely. And it takes the weight off your shoulders by asking for help and asking for that external source to be negotiating on your behalf. So it actually decreases your debt, probably decreases your interest rates and your fees. Those will stop being affected, and then from there you're making still one monthly payment. So those are the big ones for debt settlement. So we've talked about debt consolidation, debt management, debt settlement. If you have questions about this stuff, please feel free to ask me, send me a video, and I will do my best to answer your questions. And one of the things we always talk about is our credit coaches and how they work and what they can do. They can break all this down for you based on your personal situation. So, everybody's situation is different. You might have more than $10,000 in debt. Your credit score might not look great. And that's okay. And our coaches deal with that kind of stuff all the time. So they can help you break down what your options are. This is what a debt management plan will look like for you. This is what debt settlement will look like for you. And they can help break that down. So if you have any questions, please don't hesitate to ask. And as always, we're here for you. Our goal, we say it all the time, is to give you the credit that you deserve. So thank you very much for watching. Make sure you like and follow our page. Share this for people. Right now, there's a lot of questions going on. You might have racked up some debt over time. I know that that's incredibly common right now in the uncertain atmosphere, but definitely ask us any questions you have. We're here for you. And next week, we will dive a little bit deeper into some of these financial questions. And if you have any other questions for us, please feel free to ask. Thanks for watching, everybody. We'll talk to you soon.